Wages haven't kept up with inflation for years, and many of us are feeling the pinch. Whether you're working full-time or retired, it's tough to watch prices rise while your paycheck stays stagnant. If you've noticed that your purchasing power is shrinking, you're not alone. So, why is this happening? The short answer is, wages simply aren't growing at the same pace as inflation. Inflation means the general price level of goods and services rises over time, making everyday expenses, like groceries, gas, and healthcare, more expensive. But wages? They're not rising as quickly. In fact, while inflation has averaged around 3% annually over the past couple of decades, wages have only increased by about 1% to 2% a year, far below the cost of living increase. It's easy to assume that companies would raise wages to help workers keep up with inflation, but unfortunately, that's not how the economy works. Many companies are focused on maximizing profits. And with automation and outsourcing becoming more prevalent, they often look for ways to cut costs rather than increase salaries. Plus, the labor market has been flooded with competition. There's a surplus of workers who may be willing to accept lower wages just to secure a job. This is where the problem hits hard for retirees. If you're living on a fixed income, like Social Security or pension payments, it becomes even harder to make ends meet when inflation outpaces your income. Unfortunately, this situation isn't likely to change soon, and if you don't have a strategy to hedge against inflation, you could find yourself struggling in the coming years. Here's a quick win for you. One way to protect your wealth from the effects of inflation is by diversifying your savings into assets that hold their value over time. Gold has historically been a great hedge against inflation. That's why thousands of Americans are opening gold IRAs to protect their savings and retire with peace of mind. If you're serious about protecting your wealth, I highly recommend checking out the first link in the description to get your free gold IRA guide. Now, you might be thinking, but isn't real estate or stocks a better way to invest? Well, the issue with stocks is that they're volatile. While they can offer high returns, they're also subject to market crashes, which can wipe out years of gains. And real estate? Sure, it can provide income and value appreciation, but it also comes with maintenance costs and the risks associated with market downturns. Gold, on the other hand, has stood the test of time. It's a tangible asset that tends to maintain or increase in value as the dollar weakens. So, when inflation rises, the price of gold often goes up as well. If you're looking to protect your wealth from inflation and market volatility, a gold IRA could be the answer. As an American retiree with over $100K or even $5 in savings, it's essential to have a strategy in place that protects your wealth and helps you stay ahead of inflation. If you haven't already considered a gold IRA, now is the time to look into it. With a gold IRA, you can store physical gold and precious metals tax-deferred, allowing your investment to grow without the worry of inflation eroding your wealth. So, to wrap this up, wages aren't keeping up with inflation, and that's affecting retirees across the nation. But by diversifying your wealth into assets like gold, you can protect yourself from inflation's impact and make sure your savings continue to grow. If you're serious about securing your financial future, click the first link in the description and get your free gold IRA guide. For American retirees with 100K, 500K, or even 5M plus in savings, a gold IRA can be the best way to ensure your wealth is protected in the face of inflation. Take action today. Your future self will thank you.